Hi, I'm Emily Mantle, a chartered professional accountant, chartered accountant, and the founder of Compass CPA. I'm so glad that you're here because today we're diving into something that can truly change the way that you view your business, understanding your financial statements. Let's face it, the numbers can feel overwhelming, but stay with me when I say that they're not just numbers. Your financials tell the story of your business, and if you understand that story, you gain clarity, control, and confidence to steer your business in the right direction. I've seen so many entrepreneurs who are so busy that they never stop to really look at their numbers until it's too late. Suddenly, you may be surprised by a tax bill that wasn't planned for and you just can't afford, or you realize that you're running out of cash in your business just when you need it the most. Understanding your financial statements is like looking under the hood of your car. It's how you know if everything is running smoothly or if you're about to break down on the side of the road. And I promise you that when you get comfortable with these numbers, it's going to change the way that you run your business. So let's get to it. The three main financial statements you should understand are one, the balance sheet, two, the income statement or profit and loss statement, and three, the cash flow statement. Each one of these statements tells a different part of your business's story, and together they provide a complete picture of your business's health. Let's start with the balance sheet. The balance sheet is a snapshot at a specific moment in time. It shows what your business owns, what it owes, and what's left over for you as the owner. This is critical because it gives you a quick health check. Are you building wealth or are you just treading water? Here's what's on a typical balance sheet. There's assets, liabilities, and equity. Assets is everything that your business owns and has value into the future. This might include cash, accounts receivable, which is a name for money owed to your business but not yet received, equipment, inventory, and any other property that you own. Liabilities are things that your business owes, like loans, credit card balances, or outstanding payments to suppliers. Equity is essentially what's left over for you, the owner, after you subtract the liabilities, so what you owe, from your assets or what you own. It's basically what you'd have if you paid off all of your debts today and is again what belongs to you as the owner. Equity is a great starting indicator of your business's worth. Now, you may be asking yourself, why is this important? Well, let's say that your liabilities, so what you owe, is climbing, but your assets are staying flat. That could be a red flag. It means you're accumulating debt without increasing the value of your business. On the other hand, if you see that your assets, so what you own, are growing faster than your liabilities, that can be a very good sign because it can be an indicator that your business is building value. Okay, so now that we covered the balance sheet, next up is the income statement, which you may also know as the profit and loss statement. This is where you see results of your hard work over a specific period of time, like a month, a quarter, or a year. If you remember, the balance sheet was at a moment in time, and again, income statement is over a period of time. The income statement shows revenue, expenses, and net income. Revenue is all the money that came into or is expected to come into your business from sales or services that you've rendered. It's where the fruits of your labor ultimately show up. Expenses are all the costs that you incurred to run your business. For example, this may include things like rent, payroll, marketing, and other overhead costs. Net income is what's left after subtracting your expenses from your revenue. If you've had more revenue or income than you had in business expenses, you will show a profit. If you've had more expenses than revenue, you would have a loss. Overall, the income statement helps you identify where you might need to cut costs or increase sales. It's the tool that helps you figure out whether your business is thriving or just treading water. Here's the thing, just because you're making a profit doesn't mean that you're in the clear. It is very possible to be profitable on paper while still struggling with cash flow issues. This is where so many business owners get tripped up. They think, I'm profitable, so why am I still struggling to pay my bills? And don't think that you're alone if you are or have been in this position. The reality is that poor cash flow is one of the main reasons that small to medium businesses fail. This is actually a good segue as well into our next statement, the cash flow statement, which is the lifeblood of your business. If I had to choose the most important one of the three, this would be it because it shows and helps you understand how cash moves in and out of your business. It's essentially broken down into three parts: operating activities, so the cash generated from your regular business operations; investing activities, which covers cash used for investments like buying equipment or property; and then financing activities. So this is cash coming in from loans or going out for debt payments. Cash flow is what keeps your business alive. Again, you can be profitable on paper, but still run out of cash, and that's a problem. Understanding your cash flow can be the difference between keeping the lights on or closing your business doors. Now, in terms of connecting the dots and how to read the story, now that we've covered the three financial statements, let's talk specifically about how they all work together to tell your business's story. Here's how I recommend approaching it. Start with the income statement. Is your business profitable? If not, dig into your expenses and find out where you're losing money. Is it overspending on marketing for very little return on top line revenue? Are your overhead costs too high? Understanding where your profits are going is the first step to making changes. Once you have a good handle on your income statement and your profitability, let's move on then to looking at the balance sheet. Are you building assets faster than you're taking on debt? Are your accounts receivable, so money that your business is owed, growing too quickly, which could indicate that your clients aren't paying on time? These insights can help you adjust your strategies to ensure that your business stays on solid ground. And then finally, review your cash flow statement. Are you bringing in enough cash to cover your operating expenses? And from a timing perspective, are you bringing it in quickly enough? If cash flow is tight, you may need to adjust your payment terms with your customers, negotiate better terms with your suppliers, or find ways to reduce your discretionary expenses. The important point that you take away is that these statements are all interconnected, and when you understand how to read them together, you unlock the ability to make smarter, faster decisions for your business. You'll start to see patterns, spot opportunities, and catch potential issues before they become serious issues. I can't tell you how many times I've seen the light bulb go on for clients when they finally understand their financials. As an entrepreneur, it's like a weight lifted off of your shoulders. You feel empowered, more in control, and ready to tackle whatever comes your way. And that's what we do here at Compass CPA. We love helping business owners just like you feel confident about your numbers so you can focus on what you do best: growing your business, achieving your dreams, and enjoying this entrepreneurial journey. If you've been listening to this and you're thinking, wow, I really need to understand my financials better, then let's talk. At Compass CPA, we're here to help you gain clarity and control over your business's financial story. We serve, support, and educate small to medium business owners who may not get the time, level of attention or resources from accountants and bookkeepers that bigger businesses do. Head over to compasscpa.ca and send us a reach out request. We'd love to hear about your business and your goals and to see how we can help you on your journey to financial success. Thank you so much for joining me today. If you found this helpful, please like this video, share it, and subscribe to our channel so you don't miss out on more insights like this.